Hello and welcome once again to the Smart Money, Dumb Money Show. I am your host as usual, Keith Richards. I am President and Chief Portfolio Manager of Value Trend Wealth Management. And this show is all about technical analysis. Well, most of the time anyways. So today we are going to cover 6 down and out, but maybe not so out, stock sectors and individual stocks. I'm going to focus on some ETFs that cover some of the sectors that we're looking at, and then a couple of individual stock charts. These are not my usual candidates that I talk about. You guys know that I love breakouts. It's my favorite thing. I mean, everybody likes an uptrend. And of course, I like buying stocks in an uptrend too. But my very favorite thing to do is to see a stock that's fallen, based, and broken out. In fact, I wrote a whole book about it called Sideways. So I'm just a big believer in that formation. The stuff we're going to look at today does not show signs of that base breakout yet. But what I am going to suggest is these securities, all 6 of them, have come down to a support level that may be worth considering if they can prove, the keyword being if they can prove that that support level is going to hold, and you see a little bit of a base at that support level hold for a little while. This might be proof that you are truly buying at the bottom, and doesn't everybody want to buy at the bottom? Well, I'm not promising that these are at the bottom, but I am promising that these stocks all show signs of nearing really strong support levels, and they're at least worth keeping your eyes on. All right, so we're going to screen share, and we're going to start off in no particular order with the stocks. So first thing first, I want to cover lumber. Now, this is the lumber index itself. It's the continuous contract, the futures contract, and it's of course all my charts are from stockcharts.com. So you would have to find a lumber ETF, and I believe there is one. The ticker I'm failing to remember right now, but the actual ETF is known as timber. So you could perhaps take advantage of this chart if you end up deciding you'd like to buy into lumber through that ETF. Okay, so what do we see here is a very volatile chart, if there ever was one. I mean, looking back to, you guys will remember the COVID supply crunch. The spike in prices on the continuous contract was around 1750, and it's currently 344. We're talking that would be your fair share of volatility you're looking at here. Well, the interesting thing about the current pricing is that even though it's made a lower low, so it is not yet in a position that I would personally be buying at all, but I want you to look at where that lower low is. It's at around 344. And if you go back in time to around 2020 and before, 2019, that's pretty close to where lumber was trading. So I feel that if you see this price hold and a bounce, and especially if you saw this 200-day moving average, the red line here, taken out, and even better, this high here at around 500 eventually taken out, you've got a real case for some upside. A lot has to happen. More than likely, you'll see some sideways basing action if, in fact, it's going to hold at the 2019-2020 support level. There's a lot of ifs on this chart. Would I recommend buying into this or even taking a toe in the water? No, I would not. I don't think it's ready to buy yet. This is, you've just gotten a raw piece of meat or vegetable and you're just about to start cooking it. It's not ready to eat. You might just find you get poisoned by getting involved with this security too soon. But I do recommend you keep an eye on it, because if it does base, there's tons of upside potential, a big word being if. All right, natural gas, another one. Is it down and out or down but not out? Well, you can see, again, going back to 2020, there was a double bottom at the pretty much precise same level as it's trading right now. The interesting thing here is that natural gas made a low in February, you can see on the right-hand side of the chart, and has picked up, did a little bit of a peak around $2 and is settled in around $1.74, $1.75 or so. There are some signs of a base, and that's why I am very interested in this chart. I don't specifically own natural gas, but I do think that if we saw something like what happened in 2020, a lot of bouncing around in this area, it'll probably launch. Now, again, there's an if there. This particular commodity has to form support, bounce around up and down a bit, and then break out before I would be a buyer. But I think this is one you should keep on your radar. I know I'm keeping it on my radar. Okay, next chart. This is a little bit easier. This is an individual stock. It's Boeing stock, BA, on New York Stock Exchange. And what we're seeing here is a bit of a trading range of late. And the current price has come down, as you can see on the chart, to around $184, I should say. And that is a support level. The last time it hit 184, it bounced off quite nicely. So the question is, and that was, by the way, I should mention that there was an old resistance level when it did a double bottom in 2022. And that was around the same price range within at least $5 or so. So I'm going to suggest that if Boeing actually can prove to hold this $180 or so price range, it will probably move up. What would be my initial target? Around $220. Not a bad trade if you can get it just coming off of the 184 level. Perhaps higher. Let's see. But first things first, again, it's starting to show signs that it wants to hold the current level. We need a little bit more proof, but it's encouraging. If you were to look closely at this chart here, you'd see it was a white candle. I'd also point out just some of the indicators I like looking at. This is money flow index, which is a momentum index applied to cumulative money flow. And you can see that it is nowhere near overbought. It is trending down, but it's starting to get to a point where in the past, like here and here, that the indicator has hooked up. MACD trending down, no signs of changing. Same with RSI at the bottom. They're becoming oversold, but they're not quite signaling a buy. So just keep an eye on Boeing. It's not one that I personally own, just an interesting potential. And I think what you'll find is all of the charts I'm showing you here today are not ready for buying just yet, but they're showing potential. Here's another one, corn. Now this is an ETF. It's the corn ETF, CORN, on New York Stock Exchange. And it is trading at a 2021 support level. So the question is, will it do what it did in 2021, which is base for a while? Actually, that, as you can see, was a little bit of a triangle consolidation. Doesn't really matter how consolidations work. Here's one back in 2020. It's kind of a double bottom. Point is, eventually, if they break out, you can see lots of upside that happened there as well. So the question is, will this consolidation last a little while and break out? We can't say that just yet. This is not in a position that I would be buying it, but it is certainly a position that I am watching, and I do watch these positions. So I'm kind of giving you some heads up on some of the stuff that we are looking at Value Trend for our aggressive model. These would not fit into our conservative model, the things I'm looking at. But we're always looking for these turnaround stocks that have based and show potential in our more aggressive strategy. Okay, now here's a play that we actually do own. So I will disclose that Value Trend in our aggressive model holds PPLT. It is an ETF, the Platinum Physical Shares ETF, PPLT on New York Stock Exchange. And PPLT has a trading range, as you can see, where a bottom of around $80 seems to be holding, and it's been holding since 2022. It's been a pretty good pattern. And it seems to have some resistance. The old double top somewhere around 23 was around $100. But even on the lower range, you're still seeing around $90. And this level has been hit multiple times. And in fact, it was an old support level back in 2021. So my thoughts are that PPLT could move into the $90 to $92 range in the near term. Now, as I said, this is not a recommendation because all of these positions that I am talking about on this video today are for aggressive traders only. In fact, we do not own PPLT in our conservative platform, our value trend equity platform, which is kind of our bread and butter platform that most of our clients own. We hold it only in our aggressive platform, which is a much different beast than our conservative strategy. But for what it's worth, we understand the support and resistance levels. Whenever you're trading something like this and you see a support level, in this case, somewhere near 90, if the stock or ETF cracks that $90 significantly, that lasts more than a few days, so you can get cracks like this. But if it breaks down and kind of permanently breaks down like it did here, you want to get out of the position. So we know where our stop loss is, say $77 or so. We would probably be looking at selling it because it would be well below the 84, I should say, level. I think I was saying 90 is a target, so 80 is around the support level. So if we saw 77 or something like that, we would sell this position. If we see the stock hit around 90 to 92, we will sell the position for a profit. All right, high risk, reasonably interesting looking trade as far as we are concerned for aggressive traders only. All right. And I'm going to bring up one that I brought up on another video a while ago, and that's Tesla. I brought up Tesla as a potential trade here. It had gapped down. I said it might fill the gap, and if it can fill the gap, it could get up to here, the old downtrend arrow. It filled the gap, but it then found a fundamental reason to fall once again. So we are once again back into a support level. Just remember this right now, Tesla is a trader only because it's in a downtrend, but it seems to be bouncing off of a level that was support back in early 23, around 160 bucks. So let's see. I would say that because back when I was originally looking at it, we never did buy it, but I was looking at it, it was signaling oversold on many of the indicators like MACD, the momentum, money flow momentum, and RSI. But right now, they're not really all that oversold and they're not hooking up. But keep an eye because there is that support level that comes back to 2000 or early 2023 worth watching again. These are all aggressive trades. Just keep that in mind as we go through this list. And we're back to lumber. So I'm going to bring you back from the charts and just say all of these charts, with maybe the exception of the PPLT that we talked about, which we own at Value Trend in our aggressive platform, as I mentioned, all of the charts, no matter what, are for aggressive traders only. They're not bread and butter positions that conservative investors should be buying. There's tons of risk. And in fact, most of them are not anywhere near in a position that I would be buying them right now. But I do think that you've got to keep stuff like this on your watch list, because when you have a stock that's fallen aggressively, is approaching an old support level that it has bounced off of in the past, there's a decent chance that it will once again find support and bounce off of that level. You need proof, you need a base, you need that base to break out, but it's definitely worth watching candidates like this, because sometimes when you get a stock or ETF that is down and out and then forms a base and breaks out, these can be some of the biggest returns you will ever see. And actually, the stock market darling of today, NVIDIA, NVDA on the New York Stock Exchange, is a prime example. If you look at that stock going back just 2 years ago, it was a kind of a dog. It based, broke out, and you know what it's done. So just keep in mind that sometimes you can get good companies that have reported poorly for a while or have had some bad news affecting them. But if it's truly a good company, you can find support and bounce off. Charts will tell you the truth. Don't believe the news. Don't believe the media. Don't believe sell-side analysts. Believe what the charts are telling you, but the charts will tell you if and when these kind of stocks are ready to go. Thanks for watching. Have a good one, and I'll see you next week.